Welcome, my dear student, to our commercial subject group, Level 3, Account 212. Our lesson today will cover Chapter 6, Income Statement for Merchandising Business. Our learning objective: by the end of this lesson, the student should be able to know the purpose and the layout of the income statement for merchandising business, the equation of the income statement for merchandise business, and finally, the preparation of income statement for merchandise business. Let us take a look about the elements of income statement. It's constant of 5 elements. The first one is the sales revenue. The second will be the cost of goods sold. The third will be the income for operation. And the fourth, income before tax. And finally, we'll end it with the income, the net income. Let us take a look about the computing of the net income or loss. When we want to compute the net income, we should cover all these steps, and we will explain it in our examples later. Secondly, the computing of cost of goods sold. When we want to compute the cost of goods sold, also we should cover all these stages, and we will take it in more details in the next example. Let us take a look about our first activity. The following account balance were extracted from Abdullah Company on December 31st, 2019. This is our data or information from Abdullah Company. We are required to find the following accounts. Firstly, we should find the net sales. Second, we should find the net purchase, and also we should find the cost of purchase, cost of goods available for sale, cost of goods sold, the gross profit, income from operation, net income before tax, and finally the net income after tax, and we should take the tax rate of 5%. After looking to the data of Abdullah Company, let us take the first required. The first required, they ask us to find the net sales. How can we get the net sales? We can get the net sales by using the gross sales and subtract the total of the sales discount and the sales return and allowance. All these figure, we can see it from the data of Abdullah Company. Let us take a look for the data. Here we have the gross sales of Abdullah Company, and we have the sales discount for Abdullah Company, and also we have the sales return. And we have the sales return for Abdullah Company. We find this information and we can apply it in our formula. The gross sales is 19,200, and we'll subtract the total of the sales discount and the sales return and allowance, which is 800 plus 3,200. So we will get 19,200, the total of the gross sales, and we'll subtract the total of sales discount and sales return, which is 400. Finally, we will get the net sales with a figure of 15,200. Then we will shift to the second required. Our second required is to find the net purchase. How can we get the net purchase? We get it by using this formula. Our formula is the gross purchase, and we will subtract the purchase discount plus the purchase return and allowance. Let us take a look about Abdullah Company data. We have here the purchase return and allowance, and also we have the gross purchase. If we are looking about the purchase discount, there is no purchase discount in our data, so we will apply it by 0. Let us do our formula. The gross purchase will be 5,600, and we will subtract the total of purchase discount and purchase return and allowance. The purchase discount is 0, we don't have it, and the purchase return and allowance will be 1,300. So finally, we will get the net purchase of Abdullah Company, with a figure of 4,300. By that, we finish the second required. Let us move to the third required, which is the cost of purchase. To find the cost of purchase, we need to use the net purchase that we find it in the previous slide and add with it all the expense we spend it to purchase this merchandise. Let us take an example for the expense on purchase. We have an example of a freight in, carriage in, transportation in, the import tax, and the insurance on purchase. When we apply the figures in our formula, I will take the net purchase that I find it from in the previous slide, and I will add the expense on purchase. Let us take a look about the data and find the expense on purchase. I have the freight in, it will be an expense on purchase, and I have the import tax for Abdullah Company as expense on purchase. So I apply 4,300 for the net purchase and add it with 250 for the freight in and 270 for the import tax, and getting the cost of purchase for Abdullah Company. By shifting to the fourth required, dear student, you should find the cost of good available for sale. How can I get the cost of good available for sale? I should use this formula. Let us take a look about the formula. I need to use the opening inventory, and maybe in other question they call it the beginning inventory, or they will say inventory at the 1st of January 2019. I will take the opening inventory and add it to the cost of purchase, the one I find it in the previous slide. So the opening inventory for Abdullah Company, as we look on our data, it is 3,200. So I will use the 3,200, add it to 4,820, the cost of purchase, I find it in the previous slide, and I will get the cost of good available for sale for Abdullah Company, and it will be 8,020. By that, I will shift to the part of the cost of goods sold. How can I find the cost of goods sold, my dear student? I can find it by using the cost of good available for sale, the figure that I find it in the previous slide, and I will subtract the ending inventory from it, and the ending inventory I can find it in the data of Abdullah Company. Let us apply it on our formula. The cost of good available for sale, I find it before, and the figure of it will be 8,020. I will subtract 1,600 from it about the ending inventory, and I will get 6,420 as a cost of goods sold. Then I will move to find the gross profit for Abdullah Company. So how can I get the gross profit for Abdullah Company? I should take the net sales, and I find the net sales at the beginning of our calculation, and also subtract the cost of goods sold. Also, I find it before in the previous slides. So I will take the two figures, 15,200, and I will subtract from it the cost of goods sold, 6,420, and I will get the gross profit for the same company. Let us take a look and differentiate between the two types of expense. The first one is the operating expense, and the second one, the expense on purchase. What's the difference between these two? The operation expense, the expense that I spend it to operate my work, and it will be an example for it, the advertising expense, the repair, maintenance, transportation out, carriage out, the freight out, and salaries, and finally will be the rent. This is some examples about the operation expense. When I shift to the expense on purchase, the expense on purchase, it will be the expense I spend it to get the merchandise. It will be the carriage in, the transportation in, freight in, and insurance on purchase, and the import tax. I should take in consideration some difference between the operation expense and expense on purchase. If I look the word out after the type of the expense, I can know that is an operation expense. If I look the word in after the expense name, I can know that it is an expense on purchase. After compare between these two types of expense, I will move to the income for operation. How can I get the income for operation for Abdullah Company? I will use this formula. Let us discuss our formula. I will take the gross profit, and the gross profit I find it before, and I will subtract from it all the operation expense. I should take care about the operation expense because should be total, not only one expense. Let us apply it by using the figures of Abdullah Company data. The gross profit, I find it before, and it was 8,780, and I will subtract the total of operating expense. And let us take the operating expense here in Abdullah data. I have the rent expense, and I have the carriage out, and finally I have the insurance expense. All these three expenses is the operating expense for Abdullah Company. Finally, I will get the income from operation for the same company with a figure of 7,500. Moving to the net income before the tax, and I can find it by applying this formula. Let us take a look about our formula. I will take the income from operation, the figure I find it in the previous slides, and add it with other revenue and gain by Abdullah Company, and subtract other expense and losses. Let us take a look for the data of Abdullah Company. I have income before tax with a figure of 7,500. I add it with 1,200 as a revenue for Abdullah Company, and subtract the expense that Abdullah Company have it with number of 800. And finally, I get the income, the net income before tax for Abdullah Company. Then I will shift to the net income. The net income, I can find it by using our formula, which is I should take the net income before tax, the figure that I find it in the previous slides, and subtract the net income before tax, multiply it with the percent of the tax they give it to me. Let us apply it by a figure. The net income before tax is 7,900, and I find it previously